Welcome to ForexTV.com. It's Thursday, December 13th. I'm Remy Hokie for New York Forex Market Buzz. In today's North American session, the U.S. dollar is trading higher against the euro and sterling. This morning, we had stronger than expected U.S. retail sales and PPI data. As of 1:35 p.m. Eastern Time, euro dollar is trading at the 146.10 level, while sterling dollar is around 2.0389. Earlier today, the Labor Department reported that wholesale prices rose 3.2% in November, while core PPI rose 0.4%. Meanwhile, U.S. retail sales rose by 1.2% in November from the month of October. Joining me this afternoon is Brian Dolan, Chief Currency Strategist at Forex.com. Good afternoon, Brian.
Good afternoon, Remy.
Thanks for joining us today.
My pleasure.
Well, as the market digests this morning's data, we're seeing dollar strength versus euro sterling, CAD, as well as the Swissy. But let's address the wholesale price pressures here in the U.S., given that November's PPI surged for the largest monthly gain since August of '73. Now, after this week's action from the Fed Reserve, rising inflation could force the Fed to go easy on future rate cuts. Are we seeing a short-term lift for the U.S. dollar right now?
There is a little bit of that. The higher than expected PPI, and tomorrow we're going to be seeing likely similar higher than expected CPI, certainly points to the inflationary pressures that the Fed has been keeping a close eye on. And this does diminish certainly the speed of the easing that they are putting in place. At the same time, today, retail sales came out unexpectedly higher as well, and this suggests that the Fed's outlook for continued moderate growth going forward is still viable. I don't want to make too much of the retail sales number, though, due to the discounting effect that the retailers put out there to stimulate the sales in the first place. So a lot of times what happens with the discounting is you simply shift the sales into an earlier period than they would otherwise develop. So what we had with a stronger November retail sales, we might give back with a weaker than expected December retail sales. But all in all, right now, the Fed's outlook for moderate continued growth looks to be playing out with still a resilient U.S. consumer and relatively high inflationary pressures.
Well, Brian, now that we've highlighted the main focus on the fundamental front, let's move on to the majors, starting out with euro dollar. Brian, the pair hit 145.75 just before 11 a.m. and came off a low of 147.30 in the early morning trading hours. But we saw stops for the pair were popped. So what are your levels of support and resistance for the pair?
Sure. The euro dollar has had some interesting movements lately, relatively confined, but we tried again to the upside earlier for the better part of this, or the first half of this week, and those efforts pretty much came up very short. And so the drop today under the 146. 2030 area puts us back below trendline resistance from the earlier highs at 149.70, and this highlights the risk to the downside. Obviously, the data coming out of the Eurozone is tending to be weaker going forward, so that's helping to support a lower euro as well. On the downside, the immediate support is at 145.50, and the key level is going to be 145.20, which we bounced from on two different occasions since the high. So a drop under 145.20 is going to open up the downside, and my initial target below there is 144, the figure area.
And moving on to dollar yen, the greenback hit a multi-session high against the yen at 112.43, but it did dip to a daily low of 111.41 in early overnight trade, and right now the dollar has leveled off, trading around 112.15. But with equities down, the yen is under pressure. So do you expect a break under 112? And if so, where do you see support coming in?
Sure. Dollar yen, I think the key levels we're still above. About 111 potential for dollar yen to keep trying higher, but there looks to be a significant piece of market interest above at the 112.50 to 60 area, and so that's the near-term trigger for further strength. So the yen, dollar yen is a very difficult trade at the moment, given the weak data that's going to come out of Japan tonight in the form of a weaker Tankan. That's going to tend to push dollar yen higher, but at the same time you have collapsing equity market or falling equity markets and a generally increasing risk aversion, which tends to favor the yen. So that it makes the dollar-yen very difficult to call at this stage. But I'm going off of 112.50. While we're below that, I think we're in the process of topping out. If I'm wrong and we see above 112.50, there's going to be more stop losses at 113 the figure, and then there is potential then for further gains, and this would be a much broader base dollar rally at this stage. There's further potential then up to about 114.5.
Well, Brian, while we're still looking at the yen currency, let's take a look at the proxy for the yen crosses, including Euro yen and also Aussie yen, which earlier extended lows under 98. So if you could give us your forecast for the yen crosses.
Sure. Hopefully you've got the chart of the Euro Yen. That's an Ichimoku chart, and the key element to note there is that the blue colored band in between two of the leading and lagging indicators. The band is referred to as the cloud, and the cloud serves as support when the prices are above it and resistance when the prices are below it. So what Euro Yen has been trying to do has been trying to reverse the overall trend lower and is attempting to test through the top of the cloud. We traded above it a little bit yesterday, traded a little bit above it again today, but now we're back into the cloud, and this suggests a rejection from the top there. So it looks like Euro Yen, the attempt to reverse the trend higher is failing, and this suggests that we're going to see much sharper move to the downside in the Euro Yen. So the immediate support that I'm looking at comes in at 163.5. And then after that, we're looking at 161.75, and then about 160.25. And then the upper level there, so far we've been rejected several times from about 165.25.30, and we'll need to see a sustained daily close above that level to signal that the cloud has been broken. And then the other thing to note on that chart is the sharply falling orange line next to today's price candle, and that represents the top of the cloud. And as you can see, the top of the cloud is going to fall very sharply in the next few days, down to about 163 in the not-too-distant future. Next few days. So what that suggests is that this is really make or break time. I'm looking at Euro Yen as being rejected, and so I think the cloud is going to continue to contain Euro Yen's upside, and we're going to see back down into the 161.5 area in the near future.
Okay, and Brian, last but not least, I'd like to take a look at the CAD. Dollar CAD broke through 1.0215 to take out the last range top. Could we see the pair hit the 200-day moving average? How likely is that scenario?
Dollar Canada is another interesting situation. We've had reports U.S. dollar against the Canadian dollar during the course of this week. And so far, the price, up until today, the price had not really shown much movement, which is unusual. But today, the move up, and we're testing it right now, 102.30 represents some Fibonacci resistance as well as a prior high. And the key trend line from the highs in dollar Canada dating back to April, we are now well above it. That comes in at 101.20 area. And so this suggests that there's an even larger turnaround in the U.S. dollar Canada pair to the upside. So I'm looking for further acceleration to the upside, and there we're looking for the next objective is going to be about 103.5, and then after that we're looking at 104.75 to 105 the figure.
Okay, Brian, thank you very much for insight and analysis this afternoon.
Thank you, Remy.
That wraps it up for your Forex Market Buzz with Brian Dolan, Chief Currency Strategist at Forex.com. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.